So just some announcements in the budget about the furlough scheme, or to give it its proper name, the Job Retention Scheme. It's been extended to the 30th of June at its current conditions and amounts, and then on a slightly less generous basis to the end of September. So the employer will be expected to start contributing for those months, July, August and September. A bit of a surprise really, it's been extended so long. I was expecting it to probably go when things open up, hopefully towards the end of June, but there it is. The employee has to have been on the payroll at some point during the last year as well. So there's a little bit of a dispensation there around testing that it's not going to be of anything kind regarding that. It probably hadn't really occurred to most people that there could be, but the government have made that clear, so that's good news. Next slide, please. So we've got a special exemption for employers purchasing equipment for employees working from home. So things like laptops would be the obvious example, or maybe office chair or something like that. So it's got to be made available generally to employees and for that sole purpose of working from home. And they've got to be able to demonstrate that private use is insignificant really. Now, it's important the employer incurs the expenditure, because if the employee incurs the expenditure, you do have a problem, because the benefit exemption doesn't necessarily apply. So you do need to get it the right way around. The employer actually acquires the equipment. Thank you, Rob. Next slide. So just a little bit of tinkering around really. So the EMI Share Option scheme, which is a very generous share option scheme, tax advantaged share option scheme for SMEs, does require the option holder to work at least 25 hours a week or at least 75% of their working time for the employer. Now, obviously with the furlough arrangements, that might not have happened, so the government doesn't want the options to lapse simply because of the furlough. So they have granted a relaxation for the current year and the previous tax year. They are consulting on the EMI scheme. I mean, it is, as I say, a very generous scheme, and this might be a really good time to look at implementing a scheme, because the value of the shares in the company may be affected by COVID, may be reduced, and therefore you can grant more shares to employees without incurring tax problems. So it might be time to start thinking about that. Cycle to work scheme has also been a relaxation there as well. So next slide, please. Thank you. So the budget gave some reliefs for company vans. So a zero emission van will not trigger a taxable benefit in kind. So we are seeing more of those type of vehicles coming on to the market. So that is something worth considering. I see some driving around Sheffield as well. So definitely something maybe worth exploring. The normal van benefit is £3,500 in comparison. Now, there have been some issues around company vans. HMRC were successful in the Coca-Cola case in the Court of Appeal. Coca-Cola could appeal that, I understand, but we don't really know if that will be appealed or not yet. So that was a combi van, the Vauxhall Combi and the Volkswagen Combi and the Vauxhall Vivaro. So the revenue said they are not commercial vehicles, which was a bit of a surprise really. They do have second row seats which can be removed, and I think they have windows in the back as well generally. So you do need to be careful if you are using that type of van. I mean, that could also, although that was a benefit in kind case, it could have implications for capital allowances. We get a lot of questions about whether commercial vehicles qualify for the super deduction. Well, a commercial vehicle does qualify, so vans, lorries, trucks, etc. The cars don't. But could the revenue start claiming that some commercial vehicles, such as combi vans, are actually cars for capital allowances? I don't know. Possible. So it's not only a benefit in kind issue, but there's a potential capital allowances issue as well. I mean, electric cars, zero emission cars should qualify for 100% first year allowance, even though they don't qualify for the super deduction or the annual investment allowance. So it's quite a complicated area, electric cars and vans. Next slide, please, Phil. So over the last few years, there's been quite a few changes around IR35. 2017, public sector, there was a big change. Public sector contractors had to review the status of their subcontractors, and that was supposed to come in last year for large and medium-sized businesses in the private sector. That was delayed a year, so it is coming in a couple of weeks' time. So that means that large and medium businesses have to look at their subcontractors and work out whether they're actually off payroll workers, in which case they need to deduct tax and national insurance. They need to review the status. They need to notify the subcontractor, and then give the subcontractor opportunity to come back and disagree with that position. So there is quite a lot of administration to do, even if you do think all your subcontractors are genuine subcontractors. So something hopefully most people are on with, but if not, you need to really get on with that sooner rather than later. Just on these exemption for small businesses, you do need to be careful for that. You do need to look at the group. So if you're a small company but part of a large group, or you've got a large parent company, you are going to be caught. So do take care about that.